Hello guys, this is FX Bright, the trade guru. So on this video, I will be teaching you guys how to trail your stop losses and also giving very vital information on how to even understand retracements. So if that's something you're interested in, please like and subscribe and turn on the bell notification. And also if you want a one-on-one mentorship classes or training, my WhatsApp is on the description of this channel, so do contact me. Alright, so guys, on this video I want to show you guys something real quick. Now let's assume for whatever reason you had an entry somewhere here. Now I just want to trail now go check out my videos on how to find very good entries and also very good places where you can take very good trades. So but I just want to use this place as an example, as an example. So let's assume you took a trade in the market somewhere around here for a sell, right? And if you can look to the left of this market, you can see this place being a very good support zone, how price was able to bounce off this particular place, you know, make a retest for a resistance, whatever, price came here. Maybe for some reason you found a very good entry on this particular point, and of course it's going to be a sell position. So you sold the market, right? So let me start by saying this: you have no business with trailing your stop loss if you have only one position, right? Just take your profit and go home. But if you have two positions, maybe your account size is a little bit bigger and you can handle two positions or more, then you can try to trail one of them as a stop loss. So what you're going to do, let's assume you have two positions in a market. So on this particular place, on this place where you had your sell, you place the sell orders, two of them, and let's assume you want to your stop loss is supposed to be, your take profit is supposed to be somewhere around here. Normally I told you guys I like to use the Fibonacci for my stop and my take profits. For whatever reason you're taking your profit, so let's assume this is a very good support zone. So when you take your sell from here, you're most likely supposed to exit somewhere around here. So this is a very good trade. So when you get your take profit on this particular place, what you're going to do is that you're going to take profit one position, right? You're going to take profit on one position. And when you take profit on this one position here, what you're going to do is, let's assume when you took the sell order from this point, two of them, you take profit on one position on this particular place, then you bring the other position to break even. In other words, the same point where you took the two trades, the same point is where you're going to bring your stop loss. You're going to bring your stop loss to break even. That's what it means. In other words, before your stop loss was above, but now you're going to bring the stop loss to exactly the same point where you took the two positions, right? Already here you've exited one of the positions, so you just have one position left, and you want to trail that particular position. So I'll show you how it goes. So now let's go into the future and see how that works. Now, as the market is going, remember you have just one position there. As the market is going, the mistake most people make is after they see a break of structure, they bring the stop loss all the way down to this point. And this is the wrong way to trade, guys. You don't, if you want to trail stop loss, if you want to get the maximum profit for maximum benefit of trailing stops, you have to be consistent in a pattern. And the way to be consistent in a pattern is, once the market breaks structures, you are not going to bring your stop loss here just yet, right? You're going to leave this market to form another structure and break it, right? So I'm going to show you guys how that goes. So you have two positions earlier. One of them has been exited on TP here, and one is still left. So that particular one that is still left, you hold it, and the market breaks structures to the downward direction, right? So which is very good. So let me just put on that line there, just so we can see how the market broke structures. So now what we're going to do, while we still maintain our stop loss of that second position here, the market is still going down. So let's see. So now you can see, now the reason why you don't have to bring that stop loss all the way down to this bottom is because there is a potential for the market to break this structure and go back to hit your stop loss, but hit that stop loss and drop back again. So you will just not have the maximum benefit of what it means to trail a stop loss. So what you do is that you're going to leave that stop loss there and you're going to hold that one position, right? So let's keep going and we will know when we will shift that stop loss. I will show you guys when to shift the stop loss. Now you can see the market forming another structure around this particular zone, and you can see this is good. So what you're going to expect for the market is for the market to break again this structure to the downward direction. Remember your SL. So I'm going to use a red line to try to indicate where the SL is. So the SL is maybe somewhere around this point for now. So the market was around here, broke this structure again to the downward direction. The moment the market breaks the structure to this downward direction second time, it is only at this time you're going to move your SL to this point. So I'll use that red line to indicate my SL. So my SL is now here, the market is here. Reason being that the mistake most people make is that they take their SL all the way down to this point because the market has broken structure. But what you will see oftentimes is that the market can make a deep retracement, hit this SL and come back down. So you don't put your SL just in the immediate support and resistance, you put it 2 support and resistance away. So this and this, and your SL stays here. So but now, so we're going to keep it back to where it's supposed to be. So let's keep going and we'll know when we will. Now look at this one for instance. Look at this particular place for instance. Is this a break of structure? Maybe it is. But is this a valid retracement for us to consider this break of structure valid? No. What I mean is this. What you want to consider as a retracement that enables a break of structure to become valid where you can move your stop loss to is you want to use the Fibonacci. So I'm going to use this Fibonacci and I'm going to draw the Fibonacci from this top to this bottom. And let me zoom in a little bit. What you will see is that from this Fibonacci, you will see that this retracement was able to get to the 38.2 Fibonacci. And as long as it got to the 32 Fibonacci, it is a valid retracement. In other words, if a retracement comes down and doesn't get all the way to the 32.8 Fibonacci, 38.2 Fibonacci, maybe stop somewhere below and comes down, we will not treat that retracement as a retracement. We will treat it as one full leg. All right, so I'm going to make another video where I explain this in depth, but for now, just get it. So as the market was going down, so the market went up, got to a very good retracement, which is 38.2. Remember I said if it didn't get to 38.2, even though it came up and broke down, I will not shift my stop loss because of this, because the retracement was not valid. So this is a valid retracement, so the market came up and broke structures to the downward. But if I shift to this particular point, take this one away. If I shift to this particular point, what you can see is that the market was able to come down and range a little bit around this point, eventually breaking the structures. Now, does it mean I will move my SL all the way to this point now? No. I will not move my SL. I will not move my SL to this point. I'm not going to move my SL to this point, right? I'm still going to leave it here because that is not a valid retracement. So what the market did here was not valid. So I would still wait and then see what happens. So my SL still remains here. And the reason why I said it's not a valid retracement is if I pull out a Fibonacci from this point to this point and draw the Fibonacci, you can see how that particular point, you can see the 38.2 here, and this is where this guy retraced to the 23.6 Fibonacci. So that was not a valid retracement. So even when the market broke this structure to the downward direction, I will not move my stop loss. I'm going to leave my stop loss where it is in that particular zone. So let me delete this stuff. So you can see where my stop loss still is. So what I'm going to do is I'm still going to leave it there. So let me keep moving. So now the market is making another retracement. And now it's coming down. And you can see what it did. Now, I've still not moved my stop loss. I will only move my stop loss if the market successfully break this point. Remember, it has retraced and these retracements look valid, and I will confirm it with my Fibonacci. So I'll pull out the Fibonacci and I will draw the Fibonacci from here to here. and you can see how the retracement was able to get to the 50 and the 61.8 Fibonacci, right? So which is a good retracement. So if the market breaks out from that place, I will be able to take the trade. So let me keep going. So this will be the point I will be expecting the break of structure somewhere here. So if the market is able to break that place, it will be very nice. So I'm going to stretch it. Good. So the market has been able to break that particular point. So what do I do now? I'm going to bring my SL and put it here. You can see what I'm doing. So you always make sure your SL is 2 support and resistance away from where the price is right now. So when the price breaks this particular place, I won't carry my SL all the way to this one. I will leave it on this one, right? Let's keep going. So you can see the market has made a little bit of retracement. So what I'm going to do is I'm going to pull out the Fibonacci again to confirm this particular place of retracement. So you can see how that particular place was a very good retracement, and the market was able to touch the 38.2 Fibonacci in this particular zone. So this was a very good retracement. So the market retraced all the way to this point. So if it breaks structure, I will move my stop loss, right? So you can see how the market was able to break this structure all the way down. So what does that mean? I will then move my stop loss all the way to this one. So you can see how I've been going. So this is where the market is breaking structure. So now, at what point do I get out of this market? First of all, you can check my other videos that talked about how to know when a trend has changed, and you will see exactly why this particular trend changed. But just for the purpose of this video, I'll just let you know how to come out of the market. You can go watch my video to know how those trend changes. How do you come out of the market? You come out of the market when the market starts bouncing off the last swing high. So what happens is this is where the market got to. It came here. It could have broken structure again and we'll move our SL down, but it didn't break structure. It took a bounce and went up to break to the topward direction. That doesn't mean we'll come out yet. It could just hit that place and drop down again. So we'll wait and see what it does. So when the market goes up and bounce off it again, then and only then we can now exit the market, because you can see when it's bouncing off on that on this particular support zone, then it signals that the market is tending to begin an uptrend. So would now exit the market at this point. We will not let it go hit the stop loss. We will exit at this point. So guys, this is how to trail your stop loss, and I hope this video was very, very, very helpful for you, and I will see you guys in my next video.